Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, this is the video research from the ForexPeaceArmy.com, and as usual we will talk about the euro currency, discuss the previous trading session and what we could expect in the nearest futures. Well, yesterday we said that probably market could continue move to the upside with the nearest target on the daily time frames. The daily confluence support is right here, 134.40, 134.77. Also the weekly pivot point stands in that area. A bit extended target is right here. This is the 618 resistance from that swing to the downside. Also daily overbought is 136.51 for today's trading session, and very close to that monthly pivot point 137.17. You know that market pivot points, monthly pivot points traded during the in 70% of cases during the month, and this monthly pivot point October one hasn't been traded yet, so the market has a lot of chances that probably it could reach that area, but it's a bit extended forecast, extended discussion. Now let's take a look at the nearest fib resistance area. Also we said that probably market could show either stop grabber pattern and move to the downside to take out that loss, or extend it to the upside and shift the daily trend to the bullish. So that has happened. You can see that based on MACD the trend has turned bullish. Now this reminds the half of the reverse head and shoulders pattern, and beyond the moment that it looks like the half of that pattern, this swing is 1618 extension from that swing. That is very typical ratio for the head and shoulders patterns, when the head stands at 1618 from the shoulder. So that's why I have a bit blurry suspicion that probably market could show that pattern, and if it will accelerate right to that area, then we could expect some 618 retracement to that previous area and then move to the 141. This is just now an assumption because we do not have currently the clear pattern. This is just a suspicion. Well, but that is the moment that we should watch for in the medium term perspective. Well, in today's trading session we must focus on this area of resistance and could expect some retracement, and that after that we will discuss the chances that market could reach that area. On the 4-hour time frame, what we have, we said in the beginning of the week that probably when the market will hit that level, this was the 100% extension from that pattern ABCD. We will take a look at the hourly time frame. Market could show some retracement down and show greater ABCD. So that is now happening. Look at that pattern A, B, C bottom. Market almost has hit 100% extension. That stands precisely in the area of confluence resistance daily and weekly pivot point. So that is confluence resistance and daily agreement. That is very strong area of resistance, and after that, after market will hit it, you could expect some retracement to the downside. It stands at 134.63. Okay, the next target 1618 extension from that pattern stands precisely in the next area, the daily 618 resistance that we just discussed, the potential target of the head of the potential head and shoulders. Let's call it like that. Okay, so that's next agreement 136.04, 136.26. This is that area that we discussed on the daily time frame. Okay, near the daily overbought and near the weekly, monthly pivot point. Well, on the hourly time frame, also take a look that 4-hour trend is bullish as a daily time frame. On the hourly time frame, what do we see? That is our initial ABCD pattern. A, B, C bottom, market hit 100%, show 618 retracement, how we discussed yesterday, so that level was precisely the 618 from that low to that high, okay, and then accelerates further to the upside. The 1618 target stands at the same area of confluence resistance on the daily time frame. This is dashed lines. I marked the confluence resistance on the daily time frame. just above the market instead of the weekly pivot point. So that is the nearest target. This is 134.64 from that pattern. Okay. Also, that is 100% extension from that greater ABC that we have discussed on the 4-hour time frame. A, B, C bottom. Market accelerates through the 618 and gravitates precisely to the 100%. When we see that some important target stands right above the current price action, that tells us that market in the most cases will hit that targets first and show retracement second, and not vice versa. If market will start to show some retracement to the downside, don't be deceived by that price action, because this is just the attempt of the market makers to involve the newbie traders in the short selling and grab the stops just after that, of that new traders that will step in with the expectation of downward move. Wait for the hitting of that targets before entering on the short side if you are scalp trader and you intend to make some short sell on the 5-minute chart, for instance. If you are long and now your view on the market is bullish one, then probably it's not the time to just jump in, since market stands at some resistance. This very small move and potential profit move to that area, since after that market could show some deeper retracement. So for you it's better to wait some retracement to the downside. There are two suitable levels for that. The first level stands right here, 133.65. This is, you can see the previous highs right here, okay, and the nearest 6.138 support from that swing. Also, if market will hit that targets, these levels will shift a bit higher, since the market will create the new high. Okay. The next level is right here. This is the hourly confidence support, 133.15, 133.29. Stands in the same range of that consolidation, in the middle of that range. Also, that is the 50% support of that thrusting bar to the upside. Okay, so that's nice level to watch for, enter on the long side of the market, since the daily trend is bullish, 4-hour time frame is bullish, so market should not break that area to the downside if it really intends to continue move to the upside, if it really has the bullish bias. So if you will enter from that area, you could place stop somewhere below that level. If you will enter from that level, well, you could try to stop. If you have not sufficient money, you can place stops right below that area. Maybe it's a bit safer and conservative stop just below the swing slope. Okay, so that's different approach. That depends from your money management, your account value, and other aspects of the trading. It's beyond the scope of this research. So just to watch, two levels to watch for, since I think that market still has some short-term bullish bias and continue move to the upside further. Well, and that is in areas to watch for the entering on the long side of the market. Well, the target of this potential move after that, if market will hit that level, respect that confidence resistance, it could be the next target that we have discussed on the daily time frame. That's one. It's around 136 area. This will be the next target of this potential move to the upside. But today will be the non-farm payroll release, so be extra careful, since it's just the fake outs and splashes that could stop out you during the release. So act as you usually act in such kind of environment. So probably try to enter after release, or try to place the far stop. So that is just the question that you should decide by yourself. But that is my current view on the situation in the euro currency. I think that market has some still short-term bullish bias, and it could reach the 136 area. Two areas to watch for that, but as a potential to enter on the long side of the market is 133.15, 133.30, or 133.65. Okay, but if market really has the bullish bias, it should not erase that area of support. It should not move below that area to the downside. Well, because if this will happen, this will be not very common and typical for the development of the upward move during the bullish moves. Okay, So good luck to you today. Keep your risk reasonable and pull the triggers only if you will see the real patterns and have the absolute confidence in entering the market.